swing trading is a trading style that attempts to capture gains based on price action. Greg Michalowski, Chief Currency Analyst at FXDD, thank you very much for being with us.
Happy to be here.
Thank you. So, Greg, what kind of trader would you advise to use swing trading?
A trader typically who is looking more for a medium to longer term type of trade. A day trader is typically not a swing trader, although there are swings intraday. You're more looking for the longer term type of swings from the tops to the bottoms.
In your book, Attacking the Currency Trends, you offer some technical tools to anticipate and attack such currency trends. Which one of them would you recommend the most, or it's the most effective?
I use three basic tools, and they're tools that I recommend all traders use, whether or not they're beginning or intermediate or expert. They all are effective tools for attacking trends. Each of these tools define a trend, or sometimes even non-trends, because a non-trend will turn into a trend, so that's a way that you can anticipate a trend. But the three tools I use are moving averages, and I use the 100 and 200 bar simple moving average. I use Fibonacci retracements. They work in corrections within trends. And I use trend lines because they define trends as well. And if you're going to attack a trend, you need those tools that are going to define trends. They're going to tell you when a trend is over, and they're going to tell you maybe when to anticipate a trend, and also finally the corrections within a trend. Is the correction a healthy correction, or is it a correction that may suggest that the trend is actually over? So that's why I use all those three tools. They're simple tools. All beginners, all intermediate, all experts in trading should use them. So they're really universal tools for trend trading.
Yeah, but when you trade, do you base your strategy only in these tools and charts and using price action, or do you also look at the fundamentals?
That's a great question, because a lot of retail traders, a lot of beginning traders, maybe traders who come from the equity side of the business, they may be used to trading off of fundamentals or off the news. After all, everyone wants to know the story behind why the market is moving up or the market is moving down. And so there's always that temptation to utilize fundamental news in your analysis and define your trading bias from that. And I'm okay with that idea of defining a bias by a fundamental view. But the technicals are really the primary tool, because the technicals do one thing that fundamentals don't do. They allow you to define risk, and as a result they allow you to limit your risk. Otherwise, you don't know when to get yourself out. So that's the most important thing for any type of trader, whether you're a beginner, an intermediate, or advanced. You need to know where your risk is, and technicals tell you where that risk is. Fundamentals just tell you a story. They don't tell you when to get out of a trade.
Okay, so to identify entries and exits, just based on technicals.
That's the primary tool. That is a tool that all traders should use, absolutely.
Okay, thank you very much, Greg, for your advice.
My pleasure.